Gonna be getting started shortly at the top of the hour. Great show today, great show. A guest all the way from Houston, Texas. We're gonna be getting started in 90 seconds. 90 seconds. All right, quick mic check. Ashley, how's your mic?
Can you hear me?
I can hear you perfect. I can hear you perfect.
Awesome.
All right, all right. All right, so we're at the top of the hour. I'm New York time, so we are 7 p.m. And so Ashley, what I think I want to do is kind of time travel a little bit, tell you a little bit about what my audience has been exposed to for the last couple of weeks, and then
Okay.
do a formal introduction of you. Okay. So, Miss Belton, the people who are checking us out are primarily folks who are either full-time entrepreneurs or they've already started their journey, and they're just months away, or not even so much time, but sometimes it's a function of confidence. So they're just one or two deals away from having the confidence to say goodbye to the hamster wheel. So they love the product that we deliver, because what we're always focused on doing is kind of featuring some black and brown excellence. And for the whole month of February, our focus has really been on real estate. So we had a brother named Jamal Lockhart, who's in Ohio, who focuses on land in Africa as well as modular homes. And then we have a Latino brother down at ATL, talk about wholesaling. He does Frank Inglacia. He does mentorship with uh, folks who are trying to get into multiplexes. And 2 weeks ago, we were dealing with a ex vet. I'm a military guy, and got connected to him. Um, I'm trying to call his name, Bethay. He is in Hawaii, and he focuses on doing syndications, which was mind blowing. And he talked about trust and helping us understand how to structure things to maximize generational wealth. And then the gentleman on last week was amazing. He's also an entrepreneur, and he does the BRRRR strategy, where he buys a property, rehabs it, gets some renters, and then refinances it, and he just keeps doing this cycle over and again. So I think he's at like 12 properties right now, and he's a school teacher. And but
Wow.
what's really cool is he runs a basketball academy. So he's all about giving back. So you are our first, Ashley, of a week or a month long series we have with the sisters. So I
Wow.
call this segment Black Girl Magic.
There we go. I like that. I
Yeah,
like that.
yeah,
Let's
yeah. So
go, man.
I'm excited. I'm excited. So let me do like a formal introduction. Now that you know a little bit about our audience, I want my audience to know a little bit about you. Okay.
Okay.
So here's what's up, guys. Look, ladies and gentlemen, get ready to be inspired by a powerhouse hailing from the vibrant city of Houston, Texas. Today, we have the privilege of hosting a dynamic force of entrepreneurship and community empowerment, no other than Ashley Belton. As a mortgage loan officer, Ashley isn't just about crunching numbers, she is a trailblazer, a single mom, and the epitome of resilience and optimism. From navigating the corridors of corporate America to igniting her entrepreneurship spirit in the world of real estate, Ashley's journey is a testament to unwavering determination and boundless ambition. But there's more. Picture this: a fierce entrepreneur who's not only founded Girls Buy Houses Too. I really want you to get into that for us, but organized a transformative real estate event, all while single handedly holding down the family. But that's just the beginning. Ashley's commitment to her community goes beyond business, it's a calling. From collaborating with city council to assisting over 2,000 individuals, her impact is immeasurable. And here's the kicker: Ashley doesn't just stop at success, she thrives on challenges, diving headfirst into the world of mortgage lending. She is on a mission to empower her community with the keys of real estate and the promise of generational wealth. So here we go. Buckle up because today's episode promises to be a roller coaster ride of inspiration, insights, and high enthusiasm. So join us as we level up on the captivating journey of Ashley Belton. All right, you ready?
Yes, I'm ready.
All
Thank
right,
you. That was
I'm
amazing.
gonna dive. I'm gonna dive in. I'm gonna dive in. So let's get it. Let's get it. Let's get it. I really want to kind of just ask you, um, is this beyond some of the live events? Have you been on many podcasts before?
No, I haven't. Actually, this would be my first one.
Awesome.
This is
I'm
the
bringing
first
you
one
in. I
I've ever
love it. I love it. I love it. So we're just gonna have a conversation. None crazy at all. So I guess I want to start obviously at the beginning. Um, Tell us about, what inspired you before you knew anything about business or trying to bring value to the marketplace. What were some of the role models? What did you see growing up that kind of always planted that seed in your spirit?
Well, honestly, I didn't really see, entrepreneurship growing up. I'm literally like the only person in my family that has a business.
Okay.
And so I was more so inspired by like my surroundings as far as um, things that I've seen or watched on TV growing up. I just knew I didn't really want to be um, a person where I have someone else over my life. Like no one else should be in control of my life other than me.
Amen.
And just being in, working at a job in corporate, like you don't have the opportunity to do anything on your own, like as far as taking off for like vacation days for the kids if they get
Mm-hmm.
sick. You're always up against the wall, when it comes to that. And I just wanted to be free. I didn't know how I was going to own my own business. I think I was watching Oprah Winfrey one day, and I
Oprah
was just
lover.
inspired. Yes, I was inspired by how what her journey was, and the things that she faced coming up as a TV host, right? And now she's like one of the richest women in America,
Come on,
and
talk to me.
it's just amazing to be able to practically come from nothing. I grew up in South Park, which is probably one of the rougher parts of Houston,
Okay.
underdeveloped community, right? Where you don't see a lot of people that are, excelling in life. And I didn't want to be another statistic, you know what I mean? Like I wanted to be able to do something meaningful, and be on my own. I just always wanted to be my own boss. So it's kind of more of like instinct in a way. I did have an uncle, but he worked his whole life. We used to have conversations all the time about, selling different products and stuff. So he had the entrepreneur mind.
Yes.
Um, and that also was something that led me to be in the position I am today, as far as working on my own, right? And that was really it, mostly, as far as being inspired to be a business owner.
Hmm.
Once I started in wholesaling, I got a chance to see a lot more women in real estate that were really killing it. Like they were very knowledgeable. They had kids as well, so a lot of them were like single mothers too. So um, I accepted the challenge. Like I went for it.
Definitely. That is so key. So, when I was hearing you talk, it kind of reminded me. I've always had people in my family that, had hustle, but they didn't really formally think of themselves as entrepreneurs. Uncles, cousins. Um, but I like you, I was exposed to people that kind of, planted that seed and like, okay, down the road, this may be something that you know, and I don't know about you, but even as a kid, I'd be the guy that would go to the corner store, buy like $10 of snacks, and then at lunch, turn that $10 into $20, right? I was that kid. So I guess, you know, God's universe kind of just puts people, places, and situations in your path that allows you to figure it out. So talk to us about the mortgage lending and the real estate. What were key moments that opened those doors for you?
Okay. Well, excuse my baby crying in the background. I don't know if you can hear him or not, but he's a little loud. But as far as mortgage lending goes, it actually took me a while to start my journey in mortgage lending. I was a notary before, loan officer to be not loan officer, but loan signing agent to be exact, where we would close basically with the seller, the buyer, right? And close on people's houses, right? I've always been interested. I wanted to stay close to real estate investing, and I wanted to make sure I was always in the realm of what was going on with real estate, right?
Mm-hmm.
So, um, before I got into lending, I became a loan signing agent. I keep saying
Yeah.
loan officer. I'm so used to it, but a loan signing agent where I would work with investors as well to help them close on their deals. So with that though, it was just loan signing is a hustle game. At the end of the day, anything you do as a business owner, right? As in entrepreneurship, you're gonna hustle for
That's
sure.
true.
But
Yep.
it wasn't so much like I said before, I was in wholesaling, and which was a whole nother way. It was just so much, you know what I mean, to
Come
be
on.
on
I'm
one
a fellow wholesaler. I know
side.
all about
You know all about it, right? So from
it.
marketing to the sellers, marketing to the investors, like negotiating, just everything as far as bandit signs, phone calls, cold calling, anything that you can think of, I probably did as far as like wholesaling goes.
So,
So I
so
was just
Ashley,
trying to.
Ashley, help our audience out because some of them are down and they understand what wholesaling is, but do a quick education for them.
Okay, so with wholesaling real estate, it's what we call basically selling contracts. But what you do is you basically get a house under contracts, a purchase agreement with a seller, somebody who wants to, sell their home that probably is distressed. They don't want to be a landlord anymore. They don't want to own it. Just different things that will. I'm sorry. Okay, sorry. Is the baby screaming? I like.
Ashley, it's all good, all good. We are patient and we are understanding
Thank
because
you.
single black women are the cornerstone of the community, y'all. Love them to death, holding it
Thank
down. Thank you.
you. He in there hollering, honey. But yes. So wholesaling, like I said before, you get a contract with a seller. Anybody that's willing to sell their home at is willing to sell their home, and you take that contract to a buyer investor, right? Of course it has to be about 70 to 80% of the ARV, after repair value, right? So it's a lot of
Mhm.
numbers in that,
Yep. Yep.
but you just get that contract, sell that contract to the investor, make a profit in between that, which is what we call a finder's fee or wholesale fee.
Hmm.
So I hope that kind of gave them the gist of what wholesaling is, but
Yeah.
it's a lot that definitely
When
comes
when
with it.
when did you transition out of wholesaling? Because like for me, we our heyday because I had a team and we were able, for a lot for the season that we were in, we were 60 cents, 70 cents on the dollar. Sometimes, we even got it for 50 cents on the dollar. But then it got to the point where the inventory ran out and it became a seller's market.
Hmm.
And when the inventory gets short, even vacant property, they want 90, they want 90 cents on it. What was your transition like when you were, you know, making your exit out of a wholesale?
Well, mine wasn't as far as how the financing and everything works. At the end of the day, you can pretty much get a wholesale deal if you get it at a good price, right?
Right.
So, but my transition more so was on the grounds of me being more available, to my family. And more consistent with getting things done, to getting things paid for, really is what the deal is because you want to make sure that wholesaling's up and down. I've been at the table, right, and didn't close on a deal because of
Right.
certain things. Like, it's so many different things that goes into it. And I believe the last deal I really did, um where I decided to just transition out of wholesaling, was it was a subject to deal of somewhat on the grounds of wholesaling, but it was in a unique way. So it was kind of more so like the Burr method, right? How they do
Yeah.
that,
Yeah.
where I got the contract with the seller. We were, like I said, it was subject to, so she had a mortgage on the property, and had the deal at 10 grand. Got my investor come in at 25,000, right? He make payments on it,
That's
on the
sweet.
mortgage, of course.
Yeah.
And I also would make 250 a month, right? With that for between 12 to 24 months, depending on when he was ready to cash out, refinance on the property. But that deal went cold within like 2 weeks. Within
Mm.
like 2 weeks of me getting it, and it was like one of the deals I felt like was gonna, like, change everything, so, I would've made about 25,000, probably, yeah, 25,000, like, on front and back end, right? So,
Hmm.
I was gonna be making residual income, while we had that property under contract, and I lost it because the owner ended up in an accident,
Oh
and
wow.
they didn't want to. Yeah, they didn't want to sell the house anymore, so lost the deal. Buyer was there, ready to go, and it killed it. So that's when I decided, I was like, I got to do something better than this, because, sometimes it takes you about 30 to 45 days to actually, get that purchase agreement signed.
Absolutely.
And that's a lot of time, in between you making money and having to pay your bills, right? So I didn't want to be in that position anymore, to where I felt like I'm waiting on this deal to close. I'm waiting on this deal to close, versus as a loan signing agent, where you pretty much make the money whenever you feel like it, whenever you can schedule out your whole 30 days if you want to, depending on how much, volume you have. But it was just the money wasn't as consistent as I wanted it to be.
Hmm.
So I had to transition, and like I said, bills don't stop and these kids
No.
gotta eat. So,
Right.
I had to do something that was more consistent for me. Yeah.
Love it. Love it. So I mean, because I'm always sharing game with my audience. Wholesaling is an excellent side hustle. Don't get me wrong, but you got to be you got to be consistent, and it's a time thing. And,
Yeah.
and it's funny, Ashley. You spoke about family. I think it's so key. I think what led me to take a hard pivot um to Airbnb passive income was when my son, got out of high school, and you know every for like 3 summers he would do my bandit signs, or we had our SMS. We would send out text messages, and he said, Dad, I ain't trying to go straight to college. But then he went and enlisted in the army. And I said, son, being a vet, I take it very seriously. I don't want him to be, in harm's way. I said, son, you you, you had if you needed money, we were making money. He said, Dad, that's not fun. It wasn't fun. And it's kind of interesting. I thought about it because I kind of took it personal that my son would rather go to the military. And not everyone has a bad experience in the military, but I just didn't want my son to go through what I went through. And he preferred the military route than the 3 years that I was teaching him wholesaling. So I said, this is not sustainable for my family and my situation. And that's when I started, and God just kind of put things, people, places, and situation in my life. And that's when I started learning another way of leveraging real estate. But it was, for me, it was all driven by family, because at the beginning and the end of everything that me and my wife are doing, we're trying to build a family business, something that we could start, but the resources are there to kind of help my kids, take it to a whole nother level. So I'm definitely resonating with you with respect to family, because it's everything. Um, Now help my audience a little bit now with um, the notary, because that's an interesting little side hustle too. Share with my audience, if someone had an interest, how they could get into it, and just tips and tricks that they need to know in order to kind of be successful with that.
Okay, absolutely. Absolutely. Okay. So, first thing you want to do is make sure you go to, I use the Notary Association, which is the NAA, because most loan signing companies or title companies want you to actually be certified through the NNA. So also making sure you go through your state, see what you really need to qualify, because every state is different. In the state of Texas, you have to be a notary first before you become a loan signing agent. So I got my notary commission first, and then probably within like the next 30 days, I decided that I wanted to be a loan signing agent. You don't have to wait that long, but that's just what I did. Um, I became a loan signing agent. You have to take a test on the NNA website, and it's really simple. That's really it as far as like becoming a loan signing agent. But of course, there are different things that you need to know, like about what these loan contracts look like, or closing disclosures look like. Um, and kind of, because you can't really go in and as detailed as you probably would want. You don't have to read the whole contract. You just really need to know, where to sign, as far as like the notary part, the signatures part for the borrowers, of course. Also, I'm trying to think what else you really need, because it's really not much. It's very simple, very, very simple to do. um, the cost, I would say, was roughly for me about like $300 totally
Hmm.
to get the loan signing, the notary commission, and the loan signing agent part of everything. But it's very simple. It's just going to the NNA website. They do a background check when you're a loan signing agent as well. So they do a background check on you. Um, and that's really it. They'll send you your commission, and you'll get your stamp and everything in the mail, and just go for it. They have loan signing agent websites, like where you can sign up to actually do closings, right, as a loan signing agent. And a lot of people don't know, like, being a loan signing agent is very critical to the real estate industry. You cannot do anything without a notary.
You,
So it's yeah, I think it's a pretty lucrative industry to be in. Like I said, hustle at the end of the day, because um you I have it sometimes on my phone where it comes in, hey, we have a closing today. You could click and boom, you just made $150, $200. So it's just some things that, like, as far as, because you could get paid like on a lower scale when it comes to loan signing, right? If you're not direct to the actual title company, because they can pay between, I would say, about, the lowest I ever got paid was probably like $50, and that's only because I only signed like 20 pages for like what kind of contract was it? A loan modification. It was a loan modification. So it's only like 20 pages, right? But you will also receive contracts where there will be almost 300 pages. So
mm.
you just kind of want to be mindful of kind of what you're getting yourself into. Each loan closing probably takes about an hour or so. Hold on, give me a second. It's the
So, guys, if you guys are just tuning in, we are having a conversation with Ashley Belton out of Houston, Texas. She is sharing so much game for those that really because I was trying to help someone what Ashley is sharing in terms of a notary. If you have any interest, you're a young person, you got some time, you got a vehicle, and you think Uber Eats. Oh no, no, my friend. You wanna really hang on what she's saying because these notaries, they're basically are critical to the real estate industry. And again, all you have to do is have a little knowledge, have a vehicle, and per deal can be 100, 200, $300, and you can just schedule. It would be an ideal situation if I knew about this as a college student. Oh my God. I mean, Ashley, I'm gonna turn it back over to you.
Yes, so let's not forget, you can start this coming out of high school. You only have to be 18 to be a notary. And I wish I knew that at 18. I was working at a grocery store when I was 18 years old, not knowing what, was really out there, like what you could do for yourself. And it's really amazing to see, how social media, I'll say that, because social media wasn't big. I'm 31 years old, and social media wasn't as big as it is today. And just knowing what we could have done, like back in those days when we had the time, when
Absolutely.
we had the time to do it, because I would have been able to, be a lot further than where I am now. Like I want to be on a grander scale. I feel like I'm doing good, but it's always room for growth. So I definitely want to reiterate: you can be 18 and become a notary loan signing agent, and
So
it's going to
good.
cost $300. Okay,
So
just
good.
for that.
Ashley,
Mm-hmm.
I'm loving because you giving game out that a lot of people in our community are not even aware of.
Mm-hmm.
At
Absolutely.
18, you can get a a head start in understanding this real estate industry from really a ground level and make some money. So let me take a hard right, because you got your beautiful baby, on camera. Talk to us now about this the balancing the demands of entrepreneurship with being a single mom. It's always a challenge. How have you been able to manage juggling the roles effectively? And more
Oh,
importantly, what advice could you share with other single moms who are in the journey mode?
well, I can definitely say don't give up. Don't be afraid to try different things. The balance is hard. I can definitely say that, because you don't always have a babysitter. You don't always, especially now these days, because daycare is almost like paying rent.
Amen.
So you don't always have the funds to do that, and you just want to be flexible, really, what you what you have going on, and making the right moves as far as like strategizing on what would be better for you, like as far as like the balance goes. Because wholesaling, my son was what, 3 years old when I started wholesaling, and I realized it was taking a lot of time away from him. This is my first son. I have a 9-year old too, so a 9-year old and a 6 month old. And he goes the
Blessings,
oldest one.
blessings.
But yeah, it's just I didn't have the time, to do both, and provide for them, wait on those checks 30 to 45 days or even longer. It depends, right? And it wasn't as consistent. I felt like I was, kind of taking away from him, and I didn't want to do that. So when he got older, I kind of more so involved him. I do stress entrepreneurship to my son as well. He has his own snow cone business too. So uh,
Hold on, wait a minute. Stop the presses. Give us some game. How were we
we
able to cultivate that interest?
Okay, so well, when we were living in an apartment complex, I always had a bunch of kids that we stayed right in front of the park, and we had a bunch of kids that were always around. So I'm like, hey, like let's do something fun, like make some money that would be interesting for him. And so I bought a snow cone machine.
Mm.
Let's keep on with the game. I put it on Afterpay. When I bought it,
Amen.
because I don't want people to think that it's just rainbows and butterflies. No, we had to get it out the trenches, okay?
Mm-hmm.
So, um, yeah, I put it on Afterpay. I think the machine was like a commercial machine. At the time, I was also, working with a nonprofit organization. So I was like, hey, we can implement this into, going to the community events and all of that as well. So that's what we did. That's what we did. And he liked it. He enjoyed it. It was fun. It was good to eat. The kids loved it. And he charged what, $2 per snow cone for like the little 12-ounce cups. He got the ice and got it done. So it
I
was it
love
was
it.
fun. It's fun,
I
yeah.
love it. So good. Listen, parents, Kids are going to do not what you say, they're going to do what they see you doing. And if they see you are on that grind, that you're trying to, manage the now and create the tomorrow, they're gonna see that. And so I'm loving what you're doing. I wish, because I didn't really get into this mindset until my babies left the house. And the blessing is, I got really good kids. But if I could have been in a position to do what you're doing when my babies were 9, oh my goodness.
Yeah, the goal is to teach him while they're young, so I don't want him to ever think that he has to depend on anybody else to make it in life, like it's just, the idea of getting them to understand that they actually have options. College is cool, but college isn't for everybody. I personally didn't go
Amen.
to college. Not saying that I couldn't go and finish, but it just wasn't for me. I
Amen.
wanted to it sounded like a scam.
Hmm.
You pay for like $100,000 plus in debt, right?
Yeah.
By the time you're 25 years old, or what, 21 really, because most people graduate when they're about 21, 22 from college, right?
Hmm.
And I'm thinking, I don't think that's a good idea. I don't want to be $100,000 plus in debt by the time I'm 21 years old. Like, then what am I going to do? And as a mortgage lender, knowing student loans make a difference in you getting approved or not,
Hmm.
and where your credit is going to be, because at the end of the day, you have to pay back those student loans, and if it's on your credit saying that you don't pay them, then you're not in good standing. Credit score is not good enough. Like, it matters along the way, and we just want to be able to teach our kids that start while you're young. You don't have to wait on anybody else. You don't have to wait on retirement. You don't have to wait on Social Security. You can build your own retirement. Those are just the key things that I want him to want them to understand. As they get older, and because life is real out here. It's not what they make it when you're in high school. Oh, you go to college, get a degree, get a good job. Okay, I've known so many people that went to college, got their degrees, but the jobs was there weren't any,
Keep it
so they
real.
had a hard time finding a job. Like,
Facts. Facts. Keep it real.
yes, absolutely. Like, they'll be 3 to 5 years out of college and still don't have the job that they actually went to school for. So I didn't want to be that person. And I just decided to find my own way, and it was working for me. So
I
let's keep
love
it
it.
pushing.
I love it. I love it. So my audience, if you just tapping in, we have the benefit and the privilege of talking to a phenom. Not only, is she a mom teaching the kids at a very young age about grit and grind, but she's also a community person. So, tell us a little bit. You've collaborated with City Council, assisting over 2,000 individuals. Um, Share that part of your journey with us.
Okay, for sure. I was a part of this organization called Bridging the Digital Divide, and what we did was we would put computer centers in like apartment complexes. So, where low income communities, right, where we were typically putting these computer centers in, where the kids that have access to internet, they'll be able to do, their schoolwork, because COVID took a big hit on everybody. So a lot of the kids had to do their work at home, and they didn't have access to the internet.
Hmm.
So I joined that organization, I believe, in 2020. Yeah, year 2020. And I got a chance to help a lot of people. We worked closely with city council members like Shabazz, what's his name? Sylvester Turner, right? The mayor. Lord, I can't think of the man's name. Looking right at him. Um, Lord, I can't think of the man's name. But we've worked with a lot of different, people in city council, where we're able to come in and bring resources to the community, joined with other vendors, as well. And it was just a blast, honestly, to be able to be around so many different people, so many different walks of life. Getting a chance to more so really get to know the type of people, that are in the community, people that we tend to look over, to people that tend to don't get as much help as, the next class. And my goals, when I started in real estate, my goals were to teach people about real estate, because understanding wholesaling was like a gateway to, generational wealth. And it was like just the beginning of everything, of how we could actually do deals,
With no
knowing
money.
that with no money.
Amen. Right.
No money, just knowing how to go through those contracts, negotiate, market yourself, you know what I mean? Just to, make a wholesale fee, learning how to do the numbers. Like, it was a very, very simple skill that I feel like so many people would be able to live off of, honestly, because it's very lucrative. Like, you just have to know how to do it. You got to learn the skill, though. You can't go in blind. Like, I've ran into a lot of wholesalers that did
Know
not
your
know
numbers. Yep. You got
what
to know your
they were
numbers.
doing. But
Yeah.
you got to know your numbers. You got to know how to get the contracts and where they actually work, So it was just eye opening to see that. And now, as a loan officer, I see things a bit different.
Tell us a
Where
little bit more about the loan officing side of your give back, because you bring a whole nother skill set to the table now.
Yeah, absolutely. It's completely different. Completely different than wholesaling. But as a loan officer, right, we get a chance to really see what a credit profile looks like, and like how they go about like the financing, what type of loan products that are actually out there, which is stuff that I didn't know when I was a wholesaler, right? I didn't know any of that. You just knew you negotiating the contract, getting it done, and moving along. But this is more so on like the retail side of things, right? Where most people actually are. So a lot of people can't go and invest and do hard money, because they just don't understand it. A lot of
Right.
people aren't going to go and just take the time to learn the skill of wholesaling. But as a lender, you can still do the same thing. It's just going to take time. It just takes time to do it. Um, when it comes to home ownership and investing, on the loan officer side of things. So I get a chance to see where people really need to be, as far as like their credit scores go, like what their debt to income ratio looks like, things that will hurt your credit or hurt your approval, per se, hurt your approval when it comes to actually getting these people approved for loans. And we do have like a number of different products where they do like bank statement loans, right? Where if you are an entrepreneur, we'll use your bank statements to actually be your verification of income instead
Mm.
of you having a W-2. And I think that's a major game changer because, like I
I didn't know
said,
that.
COVID.
That's beautiful. Oh my goodness. So because
Absolutely.
so many of our audience are entrepreneurs, like so, what are some very key, actionable things that they would need to do if they wanted to leverage, um, a bank loan, and they have some cash flow coming in.
Okay, so what they really need to do is at least have a year of bank statements. We really only require a year of bank statements. Also, making sure that their credit is in good standing, like that you are between what a 620, I believe you're 620, when it comes to bank statement loans. You can also you can also close loans in your LLC. That is also an option. A
Is
lot of
that
people don't
okay?
know that. Yes.
Okay.
You could definitely, and it doesn't have to necessarily be like an investment property. You can close in your LLC too. So,
What's the benefits of both? doing it in your name versus or in your LLC?
Well, the cons of doing it under your name, it just helps you pretty much build your personal profile as far as like your family goes, your generational wealth, right? Um, but it's kind of almost the same, really, because the same thing you can do in the LLC is the same thing you can pretty much do um, as doing it in your name as well. I think the bigger benefits, though, as far as doing it in your name, is the down payment assistance that you are able to get. You'll probably get even lower interest rates as
Mm.
well.
Okay.
Yeah, it's some little different things, that you can that makes it buying it in your name a bit better. I can say that. But if you have an LLC, you don't want to put in your name, still an option. You may already have a house in your name, because I know with some of the loans that we have, like you can't have more than one property, using that certain type of loan product like a conventional loan. Like it would be more so considered an investment property versus it being, just you putting the house in your name, because what that does is the down payment increases when it's not your house in particular. So like with conventional you can do like 3%, but if you was to purchase another house under a conventional loan, it would be considered like a
Investment property.
yeah, investment property, where you'll be putting more like 10% to 15 to 20% down.
Okay.
Yeah, so that would be more so the difference, in you doing it in your name and you doing it under your LLC.
So I come to you, Ashley. I want to buy a house. I'm toe up from the flow up, and give me, five or more actionable steps that I need to engage in the next 6 to 9 months.
Okay, well, tow it from the flow up. That means that credit's bad, DTI bad. You need to get them W-2s and bank statements together. So what I would definitely say would be first start on your credit. Now I need to let people know that we don't use Experian, we don't use what is it, Credit Karma. Credit Karma is an absolute no when it comes to buying a house. Like that is not the credit score that you will have if you're looking at Credit Karma versus what your mortgage score actually is.
So actually go there because that's really important for our audience because that's not, I don't think that's common knowledge because of the way Credit Karma is marketed, that,
Right.
that's kind of the gateway to try to rebuild credit.
Right. So what we use as far as your credit report goes, we use myfico.com, okay, which is it gives you a series of different credit scores. So to have your mortgage credit score, the car credit score, and your regular Experian TransUnion credit scores, right? And what we use is titled a credit score 5, 4, and a 2. So, if you want to, I know it may cost you about $40 to get this, but it's you go to myfico.com, pull up your credit report, and it's going to give you everything that we use to determine what your debt to income ratio is going to be. But the credit score numbers that you're going to look for is under the mortgage 5, 4, and a 2 when it comes to getting approved for a house. And also with that, we only use the middle score number in between the three. We only use the middle score number to determine where you're going to be as far as what your interest rate is going to look like, if you're going to be able to use conventional or FHA. Um, yeah, just if you're going to use conventional FHA loans, it depends on what product will be able to give you according to what your credit score actually looks like.
Got it.
Yeah.
Got it.
Mhm.
Got it. Realistically, for someone in that situation, what should be a reasonable timeline that they should allocate to try to get that? We're talking about credit right now, but to get that piece in order?
Realistically, depending on how much debt you have, right? I would say anybody that's in debt, probably like 50,000 and under. Let's also remember that income absolutely matters too when it comes to this debt to income. If you have high debt, low income, that would disqualify you. You can have a good credit score, but if your debt to income, like I know FHA will only go up to about 56% total debt to income ratio. And if that debt to income is over that, more than likely you won't get approved through FHA for that loan. And um I say that because a lot of people, they may make a lot of money, but they also have a lot of debt.
Mm-hmm.
And that will hinder you from actually getting approved for a loan. So that's why I say I want people to really understand like the debt to income is a major factor. Also, according to the credit score, I think the debt to income is more of a factor than it is than your credit score because you can get a loan with a 580 credit score as long as your DTI is intact.
Talk to us about that, because that's a I I think in our community, I could be wrong, but I think in our community, and maybe because of the marketing, we think more about the credit score per se than the debt to income.
That's
And
right.
so shed some light on that for us.
Yeah. So I just want to really say that when it comes to that, like you want to make sure you're really doing both. Because at the end of the day, they all matter. But we want to make sure that our debt is low and our income is moderate to high because it's going to matter when it comes to your interest rate. It's going to matter when it comes to how much you have to put down on the house and if you're going to get approved or not. When it comes to the different loan products and which ones would be better for you. Some people, because we do have affordable home loans, right? Well, affordable products, right? Where these home loans are where they'll be able to get like down payment assistance as well, or we give different incentives like where we'll pay for not the inspection but the appraisal on the property.
Hmm.
There's a lot of different things to consider when it comes to actually owning a home,
Hmm.
which is what I'm going to be posting about once I get my all of my social media stuff planned out. I'm gonna be talking about closing costs and down payments and what it actually takes to get that. Because there are limitations to every single loan product that we have. Like I don't want people to think that, oh well, I'm a first time home buyer, I'm gonna automatically get down payment assistance. Not true. It's just not true. It's it's you have to be to make a certain amount of money. You know, your credit score has to be in a certain place because some of our home loan products, I mean, our affordable products, you have to have a 620 or a 680 to get those. You know, so I just want people to be in. I would say a good score would be a 620 to start with. 620 is good to have as far as credit goes, and we want your DTI to be under 50% in
Okay.
order to do that. And in order for them to calculate all that, we calculate all your monthly payments and yeah, all your monthly payments divided by your gross income. So however much you make that year and however much you pay a month on your loans. Even if you do have high what we call high cost credit cards. I think I'm saying this wrong, but high cost credit cards or whatever, high balance credit cards, just making sure that you're under that 30% of usage would definitely help as far as, calculating the debt to income as well. Because once you've ran up those credit cards and your monthly payments to begin to be higher and higher, that lets you know that you qualify for a lot less when it comes to purchasing a home.
Amen. Amen. So for my audience that are just checking this out, we've been having for almost an hour a intimate conversation with Ashley Belton out of Houston, Texas. She's been educating us, on the value of, putting all your business in order to get into home ownership, from your debt to income ratio to your credit. And so, I got two more questions and we're going to close this out. We're almost at the top of the hour. Um, you, Historically, people in our community, black and brown people, have had to rise above institutional things like redlining, like inability to give funding, or even more importantly, um you know we could only give funding in a particular geographic or zip code. And our white counterparts um you know have seen appreciation in their values, and our values have kind of become stable. Talk to me a little bit about your role in kind of that whole financial literacy and educating folks, so we don't let our past determine our future.
Okay. So as far as like redlining and things go, let's just let you guys know that is absolutely against the law. No redlining. Any mortgage company or lenders that you guys may feel like is redlining you, making you stay in a certain place, or your appraisals aren't coming back properly, there are definitely um, Consumer Protection Bureau, right? Financial Protection Bureau, they are definitely the people that you can speak with if you feel that, everything is just unjust when it comes to redlining and being stuck in that place. So I do want people to know that it's something a lot of people don't touch on. A lot of people don't know they have options because predatory lending is a real thing. Um, so I just want people to know that they have somewhere they can reach out to as far as that goes as well. But
Is that a
being
local, or is that like a federal um
federal
agency or organization?
federal agency, it's the Consumer Protection Bureau, yeah, financial
Okay.
protection. Yeah, so it's federal. So it is an absolute fine. You get fined $1 million if you do something like that. So it's a real thing, and a lot of people um I feel like back in the day had went through, that and didn't know they had the options to go and talk to the Consumer Protection Bureau. But it's definitely a thing. And as far as us getting out of that or being stuck in, in a certain way of life, I do feel like the older generation tends to not invest in real estate because of that in particular. Like they feel like they can't do this, or I can't get approved for this, or I can't do that. But there are 100 different ways that you can get into real estate, own a home. If you feel like real estate investing is too much, right? Like how we do wholesaling, or the bird method, or all these different little subject to or something like that. It could be a lot for people. It really can. But doing it the slow way is always good.
Hmm.
Home ownership at the end of the day is the best thing you could ever do for your family. Being able to have a house that can pass through for generations to generations, paying off that house. Let's get on paying off the house, because a lot of people will go, I've seen this a lot, where they'll put a reverse mortgage on the house and they think that, oh, well, I'm just going to get a check every month. But you're basically giving your house away when you do
Mm.
that. That reverse mortgage is, it only helps, I feel like, when you don't have a lot of family, you don't have, people that you want to leave the house to, right? Like that's the only time that I would say that somebody should do something like that, because if anything, you would want to leave the house to your grandkids or your children, just to leave it in the family to build that wealth, to build that equity. Because where I'm from, houses were, let's see, about $80,000 in like 2018, I
Hmm.
believe, when kind of COVID hit and people were getting those 1% and 2% interest rates at the time. Houses were about like $80,000, if not less. If they were distressed, they were probably like $40,000. You know what I mean? And
Hmm.
now the values are 200, 300 plus at this
Yeah.
point.
Hmm.
And the importance of understanding that, which is why I wanted to I wish I could have did more, but I at the time, life was life, and right. But which is why I got into real estate, which is why I have a passion for real estate, was because I seen that happen in my own community where it was more so gentrified.
Hmm.
And my thing was, we have an opportunity to be able to get in on this, leverage our own neighborhoods, because at the end of the day, if values are $200,000 more than they were 4 or 5 years ago, then what do you think is going to happen? Everybody that's living there can't stay there anymore.
That's right.
So I know right now affordable housing is like one of the biggest things, which is another reason why I got into mortgage lending, because I wanted to be able to offer those affordable terms to people, letting people know, like, that's in my age group, or maybe a little bit older than me, that you guys have an opportunity to actually get in and start building generational wealth. People don't understand equity. Another thing in our community that people just look over, but it's also another outlet in order for people to build wealth, and they
Come on.
don't know
Come on. Come on.
it. And they just
Listen. Woo, you touching a nerve. Look, my people out there, we love you. So we're gonna say this, and I don't mean any harm. If you got your house paid off, you got all this equity sitting in your house, and you got credit card bills, or you trying to take out payday loans. Oh my God, friends,
yes,
the value of your house is in the equity.
that's right.
Use the equity to invest. A dollar today is worth less than that dollar tomorrow because of inflation.
That's right.
So, yes, equity in the home.
Equity.
So good.
It's one of the biggest things. Equity is huge. And that's why, like I said, wholesaling is the beginning of it all, because it teaches you, really, like, when you're calculating those numbers, after repair value gives you the idea of what equity would look like when it comes to purchasing. So when that investor is buying that house, he's buying the equity in the house.
Yes.
That's what that after repair value is.
Mhm.
And that's why he's buying it, because he know when he sell it, he
That's
gonna make
right.
about 150,000.
Yep. That's right. So good.
Right.
All
So
right. Listen, so Ashley, as I told you, I have a couple team members. If any of my team members want to come off of mute, you allow one question, one, because we've tied up this young woman's time for almost an hour. So if you want to come off of mute, ask one question, and then I'm gonna close this out with my closing thought. Anybody? Going once, going twice. All right. What are
right.
you working on? So, and this is our final question. What um um activity, passion, goal um are you working on that is just keeping you up at night because you see how incredible it's gonna be, how delicious it's gonna be as soon as you get all the puzzle pieces in place.
Oh, well, That's crazy you asked. I ain't told nobody really about it, but what I'm working on right now, when everything is in place the way I want it to be in place, is to actually build my own affordable housing program, where it's more of, let's see, I want to put it, it's more of like we're kind of setting people up for life in a way, right? Where we're going to be partnering with education centers, not necessarily education centers, but um, community colleges, doing skilled trades and everything like that, right? Where it's more driven on putting people, like taking people from being homeless or from renting into a higher level of life, basically.
Mm,
And what's wrapped up into that is going to school for a certain skill, also insurance, right? Will people be getting a life insurance policy? Because a lot of people don't know you can use your life insurance policies as well as collateral for real estate. Taking the money out of the cash value and being able to put it down for a down payment. Um, also, it was also wrapped up into healthcare, right? Making sure that everybody had healthcare as well, insurance. It's just kind of, to me, it's more so setting you up on a path where you'll be on the straight and narrow in a way.
mhm.
And by doing that, putting them in these skilled trades and setting it up with life insurance policies and healthcare insurance, is my way of making sure everything's taken care of, right? Like understanding like that generation of wealth requires all of that, because things happen, people get sick, like people die, like it happens. And if you're in position already to do that, you know, those are like the main things I feel like people need in order to sustain and actually become a homeowner too. So making sure you have the income and making sure you have a backup plan if anything was to happen and your mortgage could be paid off.
Amen. So good. So good.
That's my goal.
So good. Listen.
Yeah,
I would love to be able to get a commitment out of you to come back in 9 months, so
sure. For
we
sure.
can check in and see how you're doing with that.
Absolutely. You have my commitment. I will come back in the next 9 months and let you know how it's going. But right
Love it.
now we're in the process. I am currently working to, meet the masses, do community events right now. So to just drop the knowledge in there, and start explaining how all of these loans work, how credit works, and your debt to income, and explaining why this matters. To see, we could get people to start understanding like what life could be like on the other side of renting a house.
Love
So
it.
building that wealth is what our focus
Love it.
is. Yeah.
I love it. So as
Thank
is our tradition, would you mind in leading us in a word of prayer as we wrap up this session of Level Up?
For sure. Okay. It's gonna be short and sweet. Well, I'll just say, God, thank you for this opportunity to bless the people that we have in the audience. Thank you for Mr. Earl for allowing this platform, so that we can grow in our wealth and our knowledge, and understanding what life is like on the other side. Like I pray that people get um, a lot from the things that we've said. We can encourage people to move further and just don't give up on anything in life, and just grow and be better. So, Amen. Thank you.
Amen. Amen. Thank you so much, Ashley. All right, my friends out there. Another session of Level Up is in the books. We will see you next week, same time. Take
All
care
right.
and
Thank you
blessings,
so much.
everybody.
Have a good one. Bye bye.
All right.